Welcome back to Investing Talk Podcast.
Today we're looking at Ondas Holdings. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, let's unpack this one.
Yeah, because for anyone who hasn't been tracking this ticker, I mean, the story is pretty intense.
Intense is one word for it.
We're looking at a company that's making a really significant pivot, a hard pivot. And the market has definitely noticed.
Noticed tremendously is maybe an understatement here. I mean, if you just look at the pure momentum, it's a rocket ship story, isn't it?
It really is.
Ondas Holdings, it's had this rare kind of explosive run. The share price is up over, 218% in just the past 3 months?
That's right, 3 months.
And the one-year return, it's shocking, 765%.
Yeah.
That kind of move usually signals something fundamental is changing, right? Not just a normal market bounce.
That's the core insight here, I think. This isn't just, meme stock hype or something.
Right.
It seems driven by a real strategic transformation. The company is aggressively shifting away from its, let's say, legacy industrial IoT stuff.
Okay.
And pivoting hard toward defense technology, high-margin, mission-critical defense tech, mostly through their subsidiary Ondas Autonomous Systems, or OAS.
OAS. Okay, and what's OAS bringing to the table that's driving this huge momentum shift? What's the actual tech?
Well, it seems to be the combination of the hardware platform they have and the market they're targeting now.
Okay.
They're leaning heavily into AI-powered autonomous systems, so think drones, specifically their Optimus platform and the Iron Drone systems.
Right, drones. But lots of companies do drones, so it's different here.
It's the application. They're targeting very specialized defense uses. Contracts focus squarely on government, national security, which, that offers a much stickier, potentially more predictable revenue stream compared to, say, consumer or general commercial IoT.
That definitely sounds like a competitive advantage, a moat, as investors like to say. Is there a specific technological edge they have?
I think so. Their underlying tech, the FullMax SDR platform, seems pretty crucial here.
SDR, software-defined radio.
Exactly. So, unlike a lot of rigid industrial communication systems, FullMax is apparently designed for highly secure, low-latency, mission-critical stuff.
Okay, like military comms or securing infrastructure.
Precisely. Think about coordinating a swarm of AI drones for defense, or securing a national rail network. Reliability, security, they're not optional, right? They're absolute must-haves.
Absolutely.
And this platform, FullMax, it lets Ondas integrate their autonomous drone systems directly into these secure government and industrial networks pretty seamlessly.
Okay.
That does create a pretty high barrier to entry for potential competitors. It's not easy to just replicate that level of secure integration.
So the big picture thesis is they move from a maybe more volatile, lower margin industrial space.
Yes, fragmented too.
Into this more predictable, higher margin defense procurement cycle. And they're using their proprietary secure communications tech as the key.
That sums it up nicely, yeah. And look, management seems to validate this view.
How so?
They're projecting record revenue for 2025.
Record revenue, okay.
And they're explicitly saying it's largely driven by that defense and homeland security backlog they've been building.
Right.
So that gives investors, especially the big institutions, some strong forward visibility on growth. And that's what you need to justify this kind of valuation run-up.
Okay, but even with that powerful story and the momentum, you always have the skeptics pointing to the actual numbers, the bottom line.
Yo, great.
Let's look at that financial transition.
Good idea.
We know the current revenues are still fairly small in the grand scheme of things, right?
They are relatively small, yes, but look at the growth trajectory. That's the key. Trailing 12 months revenue is $16.13 million.
Okay.
Now, compare that to the $7.19 million they reported for the entire year of 2024.
Wow. Okay. So more than double the full prior year in just the last 12 months. That is rapid acceleration.
It is. And that leads into the really interesting part for the turnaround narrative. The Q2 2025 earnings report.
Right. That was the beat, wasn't it? They crushed expectations.
They absolutely did. Revenue came in at $6.27 million. The consensus estimate was way lower, like $4.97 million.
Yeah, just dismantled the estimate. And what about the loss? Because they're still losing money, obviously.
Still losing money, yes, but the loss per share was also better than expected. It came in at negative $0.08. Analysts were forecasting worse than that.
Beating by 3 cents, I think.
That's right. So it was a significant beat on both top and bottom lines relative to expectations.
And that kind of beat, it's a critical psychological boost, right? It suggests the pivot is working, management's executing.
Exactly. It validates the strategy, at least for that quarter. Now, we absolutely have to contextualize those losses. They are still substantial. The trailing 12-month net loss was nearly $50 million, $49.55 million to be precise.
Okay, yeah. That's a pretty significant burn rate for a company with $16 million in TTM revenue.
It is, no question. The entire investment case here really hinges on narrowing those losses dramatically.
And hitting profitability.
That's the goal. Analyst consensus seems to be targeting profitability for late 2025 or maybe more conservatively, sometime in early 2026. But that's entirely contingent on converting that defense backlog into actual cash flow at high margins.
So if the base business is still only doing around $16 million TTM revenue and losing almost $50 million, how does the institutional community, the smart money, justify this huge price run and these aggressive price targets?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question here. The answer seems to lie in, well, belief. Belief in future execution and belief in the sheer size of the market they're targeting defense autonomy.
They're buying into the future story, not the present numbers.
Pretty much. I mean, look at the analyst ratings. We've seen 4 analysts slap a strong buy on Ondas Holdings.
4 strong buys. Okay.
And the average 12-month price target is around $7.25. But look at the high target.
What's the high target?
That stretches up to $12.
$12. Wow. Okay, that implies, well, almost 100% upside from where it is now, roughly.
Exactly. So that's a clear signal that institutions are valuing this based on maybe 2026, 2027 projected revenues and earnings power, not today's financials.
Right. And Zacks also upgraded them recently.
They did. Upgraded to strong buy just this month, October 2025. That further cements this, high conviction view from analysts.
It's a classic growth stock valuation then, based on forward potential, tech leadership, and a really hot sector. High risk, high reward potential.
That's it, exactly. The bet is that the technology is unique enough and the defense connections are strong enough to justify paying that premium now for future growth.
Okay, let's shift gears a bit to recent activity. This company isn't just sitting back and enjoying the stock run. They made an acquisition, right? 4M Defense.
Yes, they recently acquired a controlling stake in 4M Defense.
You mentioned demining earlier. Why is that specific acquisition strategically important? Seems kind of niche.
Well, it looks like a really smart, synergistic move, actually. 4M Defense, yes, they're into advanced AI and specialized drone tech. But that demining focus is key.
Why demining specifically?
Think about it. Demining operations using autonomous drones to find and clear landmines, it's a high-profile application, and it's dual use.
Dual use, meaning it has both humanitarian and military uses.
Precisely. So it generates positive headlines, shows off essential non-lethal applications.
Which probably helps with government relations and securing contracts.
You got it. It can be a valuable pathway into future military budgets, both U.S. and allied nations, while also having that immediate positive humanitarian angle. It broadens their government footprint and adds technical expertise all at once.
Okay, that makes sense. And that strategic move came right after they raised a significant amount of money, didn't they?
Yes, they completed a big equity financing round, anticipated in September, closed in early October.
How much did they raise?
Reports indicated around $425 million.
Oh, $425 million. That's a huge amount for a company this size.
It's a colossal amount of capital. It definitely de-risks their immediate financial health, shores up the balance sheet,
Right.
But it also massively raises the execution bar. The market is now watching very closely how they actually deploy that war chest.
Right. What are the expectations for that cash?
Well,
more acquisitions. R&D.
reports suggest a big chunk is for scaling up the OAS platform, getting those drone systems ready for larger production runs, also potentially expanding into drone munitions, which is a huge defense market,
Okay.
and generally targeting the U.S. Department of Defense and allied markets more aggressively. This capital is basically meant to fuel the transition from R&D into mass production and deployment.
Okay. Looking at the stock chart, since the financing, there's been some volatility, which you'd expect. Saw a dip late October after news about an investment in Safe Pro Group.
Yeah, there was some market reaction there, a bit of uncertainty. But despite that short-term dip,
The trend is still up.
the technical indicators still look pretty unambiguously bullish, actually. The stock's trading firmly above its key moving averages, the 50-day and 200-day. That confirms the underlying uptrend is still intact.
Okay.
Analysts are seeing a pretty clear support and resistance range, too, talking about a bullish trading band between, say, $6.25 on the low end and maybe $9 on the high end in the near term. Momentum still seems to be in charge.
So if momentum's still strong, what's the next big thing, the immediate catalyst that could push it towards that $9 level or even break higher?
Without a doubt, it's the Q3 2025 earnings report.
When's that expected?
Should be around November 12th or 13th, so very soon.
And expectations are high after the Q2 beat.
Extremely high. Given the Q2 performance and all the talk about the accelerating defense backlog, investors are pricing in, double-digit sequential revenue growth.
So another beat here would be huge confirmation.
It would signal the transition is happening, maybe even faster than planned. That could really pour fuel on the fire.
Any other potential short-term catalysts besides earnings?
Well, keep an eye out for announcements of new government or defense contracts. They've been hinting they're actively working on those.
Okay.
Plus, there could be some technical tailwinds around early December. December 6th is a date sometimes mentioned for index reviews, ETF rebalancing, that kind of thing.
Forced buying from index funds.
Potentially, yeah. If it gets added to certain indexes, funds tracking them would have to buy shares.
Okay, so connecting this all together, we've painted a pretty positive picture overall. I think you rated the optimism like an 8.5 out of 10.
Yeah, the bullish case is strong on the surface.
But for you listening, we absolutely have to balance that. We need to dig into the risks here because there are definitely significant ones.
Absolutely crucial. This is definitely not an investment for the faint of heart. Risk number one, the most obvious one, is just the sheer volatility.
Right. What was the beta again?
It's high, 2.07.
Wow. Okay. So for context, that means if the overall market moves 1%, Ondas could easily swing over 2% up or down.
Exactly. It amplifies market movements significantly. So you need to be a risk-tolerant investor, someone who can stomach potentially large price swings without panicking.
And that volatility is really a symptom of the second, maybe more fundamental risk.
Yeah.
Execution risk.
Precisely.
This company is basically, as the saying goes, building the jet while flying it, right?
It's a good way to put it.
Yeah.
They have incredibly ambitious goals hitting profitability by late 25 or early 26.
Which depends entirely on
flawlessly executing these massive, complex, specialized defense contracts and scaling up production to meet demand.
And that's where the risk lies. Delays, cost overruns.
That's the crux of it. Federal procurement cycles, they can be notoriously slow. They're subject to budget changes, political wins, bureaucratic delays.
Right.
If there are bottlenecks in scaling up the OAS drone programs, or maybe government certification takes longer than they hope,
Then the whole timeline gets pushed back.
Exactly. The timeline for actually turning that impressive backlog into cold, hard cash could be severely impacted. And any significant delay throws that profitability target way off schedule.
Which would likely crush the stock's premium valuation.
Instantly, yeah.
And that ties back to the financial health, doesn't it?
Yeah.
Even with that $425 million raise.
Right. It helps cushion things, but they are still burning cash. Significant ongoing losses, negative cash flow from operations.
So if execution falters, if costs to scale up manufacturing are higher than expected,
they could burn through that capital faster than planned.
which raises the ugly specter of more financing, dilution.
It certainly brings up dilution risk down the road. If break-even gets pushed past 2026, they might need more cash eventually.
Especially for something capital-intensive like drone munitions manufacturing.
Exactly. And any future capital raise, particularly if the stock price has fallen, could mean significant dilution for existing shareholders. It could offset gains even if the long-term story eventually works out.
Okay, one more caution point we need to address. Insider activity. That always gets attention, especially in these high-momentum stocks.
Yeah, it's something to watch.
We saw reports that 2 key executives sold shares back in October, and no corresponding buys.
That's correct. Now, look, insider sales can happen for all sorts of perfectly normal personal reasons, diversification, taxes, buying a house, whatever.
Sure.
But when you see sales, especially without any offsetting insider buying, happening after a huge run-up in the stock price, and in a company with significant execution risk,
The market gets skeptical.
the market often interprets it, rightly or wrongly, as maybe a lack of confidence from the people who know the business best. So while you have this overwhelmingly bullish analyst sentiment,
Right, the strong buys.
the lack of recent insider buying, and the presence of those sales, it just adds a layer of caution that investors have to weigh.
Okay, so let's try to summarize this. What does it all mean for you, the listener, thinking about Ondas Holdings right now? It definitely presents a really compelling, almost textbook growth story, doesn't it? It's mixing hot tech AI, autonomy, secure comms for defense with strong analyst backing, and these near-term catalysts like the Q3 earnings coming right up.
Yeah, and it's positioned smack in the middle of some powerful long-term trends. Geopolitical tensions driving defense spending, the push for more automation, infrastructure upgrades.
It ticks a lot of boxes.
It really does. The investment thesis seems strong, but maybe for two different types of investors or two different time frames.
How so?
Well, it appeals to shorter-term traders, right? People looking to play the momentum, maybe trade around the earnings report, capitalize on technical signals.
Okay, the momentum play.
But it also appeals to long-term investors who want that high beta exposure, specifically to the defense and autonomy sectors. People willing to ride out the volatility for potentially much larger gains years down the road.
And then there's the M&A angle too, right?
Yeah.
The speculation it could be bought out.
Can't ignore that. With its unique tech, that full-max platform, and its growing government ties, it could look like a very attractive bolt-on acquisition for one of the big defense primes. You know, a way for them to instantly get deep into these specialized drone and secure comms markets.
Okay, so lots to consider. Here's a provocative thought then to leave you with. We have this contrast, right? Recent executive share sales on one side, but overwhelming bullish momentum, strong institutional interest, and these big analyst targets on the other. Which factor do you think ultimately wins out and determines the stock's direction over, say, the next 90 days? It's going to be pure, tangible execution actually delivering on that complex defense backlog? Or is it going to be the shifting sands of insider sentiment and the psychological weight that carries for the market?